However, if this does continue for weeks or months potentially to come, it starts to create larger and larger ripple effects. And happy Thursday. We have inflation and jobs numbers all kind of in focus. And this all kind of happens during the start of kind of a port worker strike. So we will also kind of break apart some considerations if this port strike does continue. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends we're watching, hopefully weed out some of the noise along the way. So the first thing that I want to cover is really based around inflation. And what I'll share is we got some inflation data last week, but we also, as a bit of a tip of the cards, have more inflation data coming up next week as well. So last week we had PCE inflation numbers come out on Friday, and the headline PCE number showed that we were up 0.1% for the month. The core number, so again, take out food and energy, showed we're up 0.1% as well. Basically in line with expectations. The core number was slightly below expectations, actually. So anticipated number was 0.2% on the core, but nothing really to think too hard into. Obviously, as we're watching inflation moving forward, it's going to be really important to see if there's any big shifts. But for the most part, this is generally in line with expectations, and not a lot to kind of think too hard on here. However, Friday, we also had income and spending come out, and income showed it was up 0.2%. Spending also up 0.2%. And for what it's worth, both of those were less than expected. And again, one number is never anything to worry too much about, but it definitely is a trend that we want to pay attention to in terms of how that relates to the consumer and inflation and all the above for the kind of general theme that seems to remain in 2024. We also started Jobs Week this week, so we will get the non-farm payrolls number tomorrow, which is the one that we really want to focus on. But nonetheless, on just yesterday on Wednesday, we did have the ADP employment report come out. And it showed that we added 143,000 jobs for the month, which was actually quite a bit higher than anticipated. So between this and concerns around the port strike, certainly saw some shifts in the market here this week, just kind of in general. But overall, I think it was Tuesday that we saw kind of more of a down day, but it's been a little bit quieter since. But nonetheless, definitely an important data point to watch on Friday as we get the non-farm payrolls number as well. So before we get into our question about the port strike, be sure to tune in next Thursday. Tomorrow, we will get the rest of the jobs pictures. So we'll be sure to catch you up on the non-farm and non-farm payrolls and unemployment numbers. We also get Fed minutes on Wednesday, and then we get consumer price index data, so inflation data on Thursday as well. So a lot to cover next Thursday for sure. Before we break, we had a great question of the week from a Mainsail client asking about the impact of this port strike on the markets. And just in case you're not as familiar, basically there is a strike for the employees of some of the ports on the eastern side of the country. And it's really early stages of this. I think it started a couple days ago, but it has been a bit of a story. And what I'll share is that if this continues, it likely will become a much larger story. So you may not have heard about it too much quite yet, but it is absolutely relevant, especially if this does continue for a longer period of time. So what I will kind of highlight first off, before getting too far into this, is again, the length of this strike is really the primary driver as to how much this impacts. So if things get fixed pretty quickly, this might not be anything to worry about. However, if this does continue for weeks or, months potentially to come, it starts to create larger and larger ripple effects. And I think there's really two ways to look at the port strike. There's obviously a lot of considerations here, but I'm going to highlight the two that we're watching most closely. First is how this impacts inflation. Obviously, this is the story for the last couple of years. And, as the Fed is kind of claiming victory on inflation, a elongated strike from the port could absolutely impact inflation moving forward. Now, again, this isn't going to change things just for a couple of days, but the longer that goes on, we could see some effects of this. And the reason for that is twofold. Number one is supply and demand, right? If it's harder to get goods to the States, it might be the demand might still remain high. And in that case, you could see prices elevated just based on supply and demand features. But the second thing is transportation costs. So, and it's funny, I was actually talking to a client of ours the other day who's very involved in the Port of Seattle and had a good kind of grasp on how this all translates. But basically, what he was kind of showing is that the reality is that they likely will find a way to get these goods in, or at least some of the goods. But that may mean that they have to come to the west side of the country in order to get those goods in. And as you might imagine, if they are going around to get the goods into the country, the transportation costs, not just to get here, but also to get to wherever they need to go from there, absolutely could increase. And as a result of that, we could see those price increases kind of translate to the consumer at the end of the day. So again, keep in mind, this is not a short-term thing. This is if this continues for a longer period of time, but it is important to watch because it could have some inflationary impacts. The second thing is on exports. So a thing to kind of keep in mind as well is we talk a lot about goods getting into the country, but obviously we also export a lot of goods out of the country as well. And so the thing to consider here is how that translates to companies' earnings and ability to get things to the consumer in other countries as well. So hopefully that's helpful. Those are kind of the two biggest kind of broader categories that we're watching if this strike does continue. But take all of this with a grain of salt. If this gets fixed quickly, this may be a non-issue. It's just a matter of keeping an eye on it because the longer this goes, the more impactful it could be in these two areas. So hopefully that's helpful. Again, great question. So I appreciate our client for kind of sharing that thought. And be sure to tune in next week. We'll be breaking apart the jobs, inflation, and Fed minutes all next Thursday at 3.